Cory Silva. Welcome to Deal Disruptors Season 3. You're my first guest. I'm so excited.
Hey, Ella. Thanks for having me.
So, we met through an event called Fund Launch, and since then, a lot has happened. Can you start by sharing how Galactic Ventures came about?
It's been a journey to get to Galactic Ventures, but really, I'm a founder. I'm a founder first. Like 7 years ago, I launched an EdTech company called Studer, and we were trying to connect students and tutors on a centralized like peer-to-peer platform. You know, super young. My co-founder was also super young. We were in school at the time when we started, so we were like super excited to launch it. We spent 4.5 years on it. We went through the rounds of like pitching VCs, PE firms, hedge funds, angel groups, like going to incubators, accelerators, events, and all these things. And we struggled like really hard. Like we thought we had an awesome idea, and then we realized the space was super busy, and we were double shifting with school, double shifting with, with work as well. And after 4.5 years, we eventually just both burned out. And we said, hey, you know what? We'll liquidate the company. We'll move on. Maybe something will come in the future. Then I spent the better part of a decade in corporate. And as anyone who's been in corporate and you've been an entrepreneur, you get this itch to just want to get out and go back. So last year, that itch came back to me, and I wanted to go back. But I've always been interested in like finance and investing in public markets and all this stuff, but I also just love startups. Like I really just I love working with them. I love being in it. And so I kind of decided to combine the two and get into venture capital. So joined the private capital community, and that was my asset class of choice. And I just love working with founders. I love working with startups with great ideas. There's like so much innovation in the field, and it's high risk. It's tough, but you're just working with highly driven people that want to fix a problem, put solutions out there and solve problems for people. So that's where I started Galactic Ventures. So my whole goal is to raise a fund eventually. But I started syndicating deals. I started getting all these founders reaching out to me, needing help to raise capital, wanting to get some really awesome investors on the cap table. And so I was like, okay, this is my way to get in. So I started syndicating deals this year, and it's been good. The deal flow has been great, but I probably say yes to 10% of the deals that I see. So out of 100 deals, I only say yes to 10. That seems to be the cadence for me. So, but that's kind of how Galactic Ventures was born. And then here we are today.
I love that. And I love the lens of like you really pulling out your own pain point from your venture and being like, hey, I actually want to help solve this problem, because it's really challenging raising capital, especially when you're not in that world. It's such a different world. For anyone who doesn't know what a syndication is, can you just walk us through what that is?
Yeah, it's, I call them like mini funds. That's essentially what they are. But all of a syndication or an SPV, whatever you want to call it, they're all the same thing. It just means you're working on a deal-by-deal process. So like a normal venture capital firm, they'll have some sort of thesis, they'll go raise a bunch of money, and then they'll just deploy that money into startups. So they'll capital call down, all that sort of jazz. Syndications, you basically find great deals, and then you secure allocation for that deal. So if you're trying to, they're trying to raise $1 million, maybe you secure 100K of that, and then you'll go basically to your investor network and you'll raise capital for that deal. But so the difference here is you're raising capital for every single deal versus like a traditional fund where they already have the capital to call on and then deploy into the deals. So. But for many syndicate leads, it's a way to get into the industry, to get experience, and it's a way for investors to also put smaller check sizes into the private capital market. Because so honestly, to get into some of the major funds, some of the minimums are like 100, 200, 500K, and even if you're an accredited investor, you're like, I don't know if I can put up 100K or $500,000 into a fund right now. Whereas like a syndication, I can take checks as small as 2.5K, all the way is up to some of those bigger checks, but you can take on some of the small investors. It lets them get the experience of being in the private markets, be able to actually like invest in some really amazing emerging startups. So that's why I've leaned into syndications. It's great for the founders, and it's also great for the investors that want to participate but are having trouble participating in like a traditional way.
So simply what we're doing is, with a syndication, we're pulling together different capital so that on the cap table for the company, there's not these smaller check writers and it looks cleaner.
Absolutely.
And so what would you say if I've never invested in an early stage company, what are the kind of key points that you're looking at from a Galactic Ventures standpoint?
Yeah, I mean, the nice thing if you're investing in syndication, like someone like myself and Galactic Ventures, like we do all the due diligence, we do all the work. But a lot of the stuff that we end up looking at, especially for early stage companies, is really focused on the team. And you'll hear this from many venture capitalists as well too. But focusing on the team is the biggest one. So getting to know the founders, learning their experience, and then seeing if that experience is applicable to whatever problem they're trying to solve. Because honestly, you'll hear people say like you're betting on the jockey, and that's truly what it is in early stage companies. Because you can get all these financial projections, you can get all these assumptions down, but it's the people that are going to execute and get it done. And so really it's up to like, do you believe that they'll get it done? So half my due diligence is honestly, sometimes it feels so shallow. It's like you're judging people. But that's really the main meat of the deal. And then like, of course there's, some specifics down into it. You can look into the financials. You do your own research on the actual market itself. So there's a lot of like, background work and due diligence that we end up doing to make sure that the opportunity is in fact there, and the team, this is the right team to do it and execute and move forward and do everything they say they're going to do. So much of that is done on our side. But, from an investor standpoint, all you're really trying to make sure is like, hey, is this like good deal? Like, are the terms good? So a lot of times early stage companies, they'll offer discounts. You'll be able to, hopefully for syndications, there's no management fees. So for my example, there's no management fees as well. Sometimes you'll get discounts on performance fees as well too. So a lot of those things are the ones that investors will look into. But then for me, all my due diligence, I'll try to spit it out onto like a one-pager, a deal memo, which is something that everyone else can actually go through and read so they can understand like, hey, this is the company pitch deck. And then this is basically my opinion on how the deal is looking and where I think it could go. So it's like they get like two sides of the story, the one being told by the founder and then the one being told by like the syndicate lead.
I love that. And what kind of projects are you currently raising for?
Yeah, so probably the one I'm most excited for is DFX, the Deal Flow Exchange. So that one in itself is super exciting. And I have many reasons to be interested in DFX, both from a personal standpoint and from just like actually believe that there is a problem to be solved here. So for like,
and I don't want you to be biased here, but like,
yes.
what makes you like, first of all, what is DFX to you, and what kind of like sparked your interest in wanting to do a syndication? Because it's a lot of work for you. Like, we've been jumping on calls, we've been trying to do as much from our perspective, being the co-founders, but I do realize that you're taking on I want to say a full-time job, and you're not going to see rewards from this for a very long time. So you have to be very passionate about a project and want to put a syndication together.
Yeah, I mean, that's the beauty of it, right? Too, like my whole like pitch and way I want to help founders is like to take a lot of those capital raising stresses off, right? So it's nice when you're working really closely with them because it can help support the raise as well too. But yeah, I mean, if you believe in the deal that much, you're willing to put your own time and money into it, then whether the reward comes like a year or 7 years down the road is still going to be worth it, right? Because again, you're betting on the people in the team, not necessarily like, what traction they've had in like a month. So anyway, but DFX, like to me, that's why I'm so passionate about it, is really like twofold. One, for me personally, like as a venture capitalist, as a syndicate lead, putting my deals or SPVs, whatever, onto a platform where like engaged investors can like actually reach out to me is pretty cool. it's one of the hardest things as a co-syndicate or a syndicate lead to actually get like your investor network to grow. So this is one way to grow your network. And then two, to actually get investors to engage with your deal. That's a whole other thing. So much of the work that I do is on that end, right? It's the capital raising front. So this can help with a lot of the capital raising. So for me personally, that's where I see the benefit as a venture capitalist. But then for the greater like private capital community, like it's not just to VCs, right? It's for private equity firms, for real estate, for bridge loans, for debt funds, whatever is out there, you can, it's a place for capital lenders and capital, raisers to like connect, which is pretty cool. So that's why I'm so interested in it, because I'm like, this is something that's needed, because I'm experiencing it right now, some of the pains and struggles of it. And I'm like, this is aiming to solve that. So be able to like, secure some allocation, be part of that journey is why I'm so passionate about DFX itself. So I'm excited for the deal. It's super exciting.
I think when I first met Jesse, what really sparked my interest was the way that he positioned the economics and not charging the capital raiser. It's pretty much flipping the industry on the head, and also challenging intermediaries that are charging companies a $1,500 retainer, 3 to 5%, or whether it's an investment bank that wants a part of the GP. And I think that being able to be a woman that didn't come from a financial background, came from a founder, had a really hard time with a business broker and trying to exit my company. The ability to be able to have these, I want to say like, it's just evening the playing field for everyone, whether you want to buy a company, whether you want to get multiple timesheets on a deal. It shouldn't be like this kind of punishing process. It should be actually exciting. And I think that's the Bumble approach of the investor, the family office, the lender reaching out to the opportunity. It feels cleaner because it's not, you don't feel like you're a salesy person like spamming investors. And honestly, the solicitation, I think I've done it. We've all done it. Like we've all done cold outreach, and there's no shame in that. But I think that it doesn't feel energetically clean.
No, I agree. And it's also just like mentally exhausting, right?
Yeah.
So yeah, it's a nice platform to be able to do that. And like you said, like kind of flip the industry on its head a little bit. And it's like, it's super affordable, which is hilarious, because when people are asking me about it, they're like, I'm sorry, like, the first tier is like $10 a month pretty much, right? And they're like, I can go on for $10 a month and potentially have accredited investors engage with me and just have my deal on there, and that's it. I'm like, yeah, that's pretty much it. So the accessibility of it is like really cool, which is another aspect of it. So yeah.
I think a lot of people that we speak to, they're like, where's the catch? And the reason why we're able to make the economics so affordable is because we are charging the lenders 1% on all debt transactions, which if you're in the industry, 1 to 3% from a lender baking them into, their term sheet is very normalized. So business development for them, they're happy to pay that 1% because their pipeline is going to immediately grow, and they can send multiple term sheets a day, and all they're paying is $99 per month from a business development standpoint. But then on the other side, how we've grown so quickly is really the white label of the communities, where it's the same approach. We're doing the exact same business model, but we're splitting the revenue 50-50 with that investment community. So now all of a sudden, these communities have a place to pretty much have a sandbox to come and actually get deals done in a way that is built on integrity, which I think is really important for Jesse and I. Like we never see us being acquired by a company, and it's mainly because what we really are is a social media platform for private capital. And so that means that we're really a data platform, and we never want to sell that data, and we never want the data to get into the hands of the wrong people. And it's something that we've been approached even recently for people wanting to acquire us, people wanting us to sell data. And we're like, no, that doesn't align with the mission of why we've set out to do this.
Yeah, no, that's it's good, right? And see, that's like part of the why I love this deal and the team so much. Like, you guys believe in the vision, which is great, right? And you're willing to stick to it no matter what. So, and the communities are great. Like I was going to mention before too, but you can like having all the communities housed there be able to join them and do everything just on one platform instead of like, I don't know, for me, when I was getting started, I was joining several investment communities, and I have like, 10 different websites you need to go to join these communities, to work on deal flow. And it's exhausting, hard to deal with. So if, what you have here is a very like segmented investment community. And what you can do is like bring them together, right? Consolidate that, where they still have their community, they still have their specifics, they have their memberships if they have that or whatever, right? But you can house it all in one place, which is very, very nice.
Yeah, and I think that's what is going to be really exciting about you actually rolling out the pre-seed, the early startup community, is how we're going to humanize the platform. That is like our biggest kind of like, I guess, pain point, is making sure that if you do have a deal on the platform and you haven't had any engagements, it's like, okay, well then come on the bi-weekly community call with Cory. Like, let's hear your pitch, let's work through the economics, and maybe let's get some feedback. Because I think as a capital raiser, you don't know what you don't know. And some people are not, they don't want to tell you the truth because they don't want to care about your feelings. But you need to have that community aspect in order to make sure that your deal is positioned in the right way. And or if you're raising debt, like maybe there's something in the underwriting where the lender can be like, hey, if this was changed, then, or if your revenue was up to here, then I'd be able to give you a better rate. But unfortunately right now, like, this is where the terms are at for these reasons. Yep.
No, exactly. And, surprise to anyone that was, not sure to like, oh my God, we're going to do deal reviews now. Yes. That'll be something that we're going to do as well. Cause if you're not getting engagement, there's something going on. But it's also a nice place to actually bring on, potentially capital lenders onto that same call and get them to see like firsthand, like some of these deals that maybe they've just missed, right? Like, who knows? There's plenty of reasons for it. But excited to kind of get that part of this like community going as well too, because there's tons and tons of great deals out there. So
yeah. And what is kind of your, I guess, like when you are looking at different early stage companies, what is kind of like some green or red flags that you're currently seeing? And like, I guess just kind of like, it's kind of like speed dating in a sense. Like, you're looking at so many deals. Like, what kind of things like perk your interest when you're looking through decks?
Yeah, for me, there's a few things. Sometimes it's not when I'm going through decks that like the green or red flags come up, because I think people have learned to make decks look really good. They'll show what they need to show. But, from a deck perspective, if there's not much information on the team and their experience, it's a bit of a red flag for me. I want people to feel like they can lean into themselves, because that's ultimately what it is. It's, them selling themselves and like the startup and their team. And so if they don't have enough information on that, to me, that's already a red flag. I'm like, I don't know. If they don't feel confident enough to put it in a pitch deck, then they're not confident enough in themselves. And then, maybe sometimes it's hilarious because some VCs will, I think the opposite of this opinion here. But if the financials are too lofty, if they are just like shooting for the moon and their assumptions are just way off base, that's, to me, it's a bit of a red flag. I'm like, it's good to be ambitious, but I also love realism, right? Like, I would rather you tell me it's going to take 5 years to do something than you say you can do it all in like 6 months, and then it never happened. So that's another red flag for me. I don't know. There's a few. Sometimes like it's one of those things when you see it, you know it. One question I like to ask, and if sometimes it can pop a big red flag, I always ask them like why they're looking for funding. Because not every company or startup needs funding, or they don't need like venture capital funding. So I don't know. I think I'm one of the weird ones where people come to me and, I ask them like, why do you need funding? They'll tell me whatever answer they want to tell me. And if I feel like maybe they don't need funding, I'll turn them somewhere else. Like, I'll absolutely tell them like, hey, I think you just actually need to get a couple grants, because there's a bunch of grant programs and stuff like that there. There's free money out there that could be used. So I tend to be very open on funding and not just be like very selfish in terms of like I want to get all the equity and all the capital and all that stuff. So So anyway, hearing the answer about like why they need funding is usually a big one for me.
And I also think from like a founder's perspective, if you can bootstrap and get more of that traction, that MVP, like whatever your solution is, like really showing the proof of the model and not, I don't want to say being lazy, but like you can do a lot with not much money if you have the drive to. And that's what I love about DFX is actually before our salaries were taking out, like our MRR was 2 times our expenses. And in such an early stage company, that's huge for us. But we knew that we needed to bring on the right talent in order to support our growth. And that was really important to Jesse and I. It was like, we didn't want to screen this safe round from the, from the hills, but we wanted to make sure that we had the right strategic investors in the sense that we weren't just letting anyone come onto the cap table. And a lot of our investors are also, being a key driver into DFX and the strategy. And we really want that as far as like also being on the advisory team.
Absolutely. And that's why I was like, that itself is a big green flag, right? Mm-hmm. Like being able to bring on investors that are going to add value beyond the capital is a big one. And so many investors want that, but a lot of, sometimes there's a lot of startups that they just purely just want the money and let them do it. So it's nice, there's a good balance of both, but it's nice when, you're able to add more value beyond the money you can provide. Right. So, yeah.
And I'm actually so excited for that to be like the next part of my journey. Like I was a very heavily crypto investor very early on in life. And I think from my upbringing and my dad being a professional gambler, I kind of loved the experience of like crypto because it's such a volatile market. But I also really believed in I really do believe in blockchain. And I think that that's definitely going to be a part of DFX's roadmap.
Cool.
But now being able to like see this whole kind of like, this is my first time raising capital in the sense of like, I bootstrapped all, my previous ventures and I never really saw myself as like a person who could feel like I could go out and raise capital like I did for DFX. And it really shows that like, you really need to have these strong relationships in order to be able to feel comfortable. To ask people for money is like the strangest thing.
It is. It really is.
Something that is not, it's still very early on, and you're taking a high risk investing in early stage companies. But as you said, I can't wait to do that for myself and my own investment portfolio because it is such an exciting journey to be a part of someone's vision and really bet on someone that, other people might think you're crazy. And that's like the whole part of this entrepreneurial journey.
The crazier, the better. The crazier, the better. And also for any cap raisers out there, right? The one thing I'm learning is that you're not trying to convince them of the idea. You're trying to convince them that you 100% believe in it. They want to believe in you, not the idea. And so that sometimes is the hardest part, right? Because you immediately want to be like, look at this idea, but they want to just hear how passionate you are about it. But it is still a very weird skill to learn. But once you have something that you're that passionate about, right, it becomes a little easier and you have less shame about it and you just keep rolling forward. So
actually this morning I woke up and I had an email from a really good friend, Jeffrey, had introduced me to a woman who wants to invest in DFX. And that's what I love about DFX is like when you log in and you have an engagement for an investor, like this email this morning made my day because it's like they're reaching out to me. And it's just like, it really does show the power of like, if your deal, if you really are passionate about your deal and you can present it in a way where you will have investors reach out to you. I promise you that. And I think that when you have that moment of someone reaching out to you, it's a whole different, like, I don't know, emotion.
Yep. I agree. It's a bit of a thrill. It's like even, this week when I had a couple like wires come in for some deals and I was like, it feels good because people are like, they committed. And that commitment in itself is so validating, right? For people like us. So, yeah.
Yeah. And what is next for Galactic Ventures? Like, where do you kind of see yourself over the next, I guess, 6 months to a year?
Yeah, I mean, for Galactic Ventures itself, I'll continue sourcing deals and doing syndications, but I'm also in the process of wanting to raise a fund as well too. So it's a little easier to deploy capital instead of having to raise every single time, and you can focus mostly on just deal flow and the quality of it. So that's what I'm gonna be working on over the next probably more like 12 to 24 months, is working on what that could look like. But I still plan on also syndicating alongside that. I never want to stop doing it, because I think there's a true purpose here with syndicating, and there's some huge syndicators out there, and it could be super rewarding. But I want the leverage of both. So I'm going to be working on that, and you'll likely see Galactic Ventures pop up a lot more too in the DFX community as well too. So I think that's probably what's in store for me over the next 6 to 12 months.
Yeah. And so what I'm going to do is I'm going to link below your podcast, as well as if you want to sign up to DFX, use the code Galactic. So we'll link that below. And then I hope to see you guys join into DFX communities. That's going to be really our driving force over the next years, is making sure that our communities are of value, and you're really getting that kind of just support that you need wherever you are on your deal journey. Absolutely.
I would highly recommend it. You'll see me on there. So,
and then we also have our private capital happy hour. So Cory's actually going to be hosting one in Toronto, and upcoming all over the US. So yeah, I'm excited to go on this journey with you. And thank you so much for joining the Deal Disruptor podcast.
Awesome. Thank you for having me, Ella.
Yeah.